Amateurs talk strategy, professionals talk logistics. So I think a lot of people would be well suited when they look at how they're deploying their strategies. How do I get so everything's lined up and it executes perfectly?
Any self-respecting trader that takes this as a real business or as a real profession has that stuff nailed down. Like, you're a guy that has zero emotion to money, which is super impressive for a human.
We'll just go through some stuff that's randomly hitting our head, but first thing I'd like to say is story from the trenches. What's some of the worst trading days that kind of come to your mind of your experience ripping off?
Before I was like systematic, or like when I was
anything, when you were done, when you were systematic?
Oh my God. I think a lot of people could relate to this. Like, I'm watching my stops. Like, I've watched stops like so I was just trading essentially spreads. This is early on in my career, discretionary trading essentially, right? So just like, sold a put spread like 50 wide, maybe 20 units. Like, I'm just gonna, if it gets to here, like
you found support in the market.
yeah. I'm like, this cannot possibly. We already made a 2% move.
You looked at the stars. You decided that this green line will stop the price.
I played the astrology game, the male astrology game. I'm like, there's no way it can go lower than this. Like, every support, you got 3 EMA daily crossing, you got GEX, you got pivot points, you got like everything. It's like POC. There's no way it's going lower. I'm going to shoot my shot here. And I was trading just manually on Thinkorswim. Like, this is back in this, like, maybe 4 or 5 years ago. And things move rather quickly, as I'm sure, and a lot of people know. Gamma can really spike option prices and volatility, and you quickly go way beyond your stop, and you're like, okay, it's gonna come. Like, I know it's past, but it's gonna come right back, right? Obviously, right? Yeah. Then you eat the stop of the full width, and you contemplate your life real quick. Yeah. And this is like improper sizing, not understanding, like, not honoring stops, like the typical, traditional tuition that people pay, and that was like. For my account size back then, like, a very nice watch was essentially donated to Kenny.
What type of percent drawdown was your biggest drawdown you've ever taken?
Ever?
Yeah.
In my career,
account and net worth wise. So like a little perspective.
I'm pretty conservative. It's not going to be anything like, you're not going to see the lost porn you're looking for here. Like, it's not going to be, because I'm very, like, in my corporate world, the 10 years I spent in my corporate world, I was dealing with finance like full time. So like, I knew what I could risk, what I could afford to risk, and I kind of never, went beyond that. So it's not going to be like 6-7%. It's nothing like crazy.
Yeah. You weren't rolling the dice.
No. I was never like a YOLO kind of. No. But still, like, dude, like, for me back then, like, I'm losing 20 grand a day. That's a lot of money. Right? Yeah. I was like, that's a watch. Like, that's something. A car potentially, right? Like,
sometimes I look at my P&L and I'm
I talk to you about this a lot, actually. I'm like,
it's like maybe like I don't know, 300 grand a day, and I was like, if I stack that up in $100 bills, that would be decently big.
Because I see the swings of your fund, obviously, right? And I'm like, how do you mentally? I think you've become like, and I think
standard deviation's low, dude. Standard deviation's low.
And I think
daily return percentage wise,
you've gotten really good at, like, what I told you initially when we started talking. I'm like, you're a guy that has zero emotion to money, which is super impressive for a human. Like, unless you're some android from David's, android building farm, like, it seems to me, at least, you hide it well, that you have zero emotion to cash.
Yeah,
like,
I mean,
substantial hundreds of thousands of dollars swinging minute by minute is like, I know it's a fund, it's cumulative and so on.
Risk is relative. Like, I think people need to understand that, where it's like the amount of risk I'm taking, like dollar wise, is not, like, may seem like a lot, but percentage wise, negligible.
I agree with you, but we still, as humans, we still have emotional attachment to money, right? And as humans, the amount
that's a scarcity mindset.
It's just a human emotion.
Like, think about it. Money's everywhere. Like,
I agree with you.
Printing billions of dollars. It's like air. People don't even think about it. Like, that's how you need to be thinking of money. It's like air. There's always more of it whenever you want. It's literally constantly there.
No, I get that part. And I think it comes back to, like, listen, you didn't come from some oligarch family where you're pissing 300 grand, right? Like, I think as your story goes all the content you put out, you came from humble beginnings, construction worker turned hedge fund manager, right? Like,
I'm from the Bay Area. I had a nice upbringing. But
like, but in reality, like, you weren't driving McLarens at 16. Like, you know what I mean? You still, paved your own way, like, decided to do this as a career and so on, right? So seeing losses of multiple hundreds of thousands, again, relative account size, relative to risk, I know it's all controlled, but there's still an emotional value of, like, what can that money buy me in today's world, right?
Yeah, I mean, I think a big thing is just, like, can you really look yourself in the mirror and be like, if this blew up how I think it blows up, I'm, like, completely good with that. And it's, like, frankly, for me, and I quote a lot of Chris Abamasia content. It's really good. But he was just on a podcast, and it's, like, he used to work at SIG, which is Susquehanna International Group. They do a lot of market making. It's like, okay, they have their, like we talked about, their daily and their weekly P&Ls. But then they would also, like, basically go to their MD and be like, if stuff really went wrong, like oil going negative, it's like, this is how much money we're actually going to lose. And, like, a part of this is, like, that one in a decade or every 2 decade case scenario. It's like, it's probably actually going to look like 50%. But the thing is, it's like, if you're making 40% a year, it's like, is that really a risk? Like, diversification is just a very easy way to do that. And I think a lot of people, because it's like, if China took over the grid and the CBOE failed, or there was some massive fraud internally from the CBOE, counterparty risk, I'd lose 50%. Like, that can happen. But the thing is, it's like it's very common for people to get hit by a drunk driver when you're out there. It's like, wear your seatbelt. You're not driving on New Year's Eve. Like, You're careful with your driving. It's not snowing. It's like
calculated risk.
Yeah, you have to take some type of risk of what you're doing. And it's like, I think knowing both of those, where it's like risk in theory and risk in practice, it's like our stops work, our standard deviation. Sure, we get some slippage, but it's like, even if the CBOE did fail, it's like, you may be the cleanest shirt in the dirty laundry pile, which is, like, also a relative sense of what that is. So I think it's always justifying it to yourself of what that is, and also being very clear with doing it. So, like, anyone I take in the fund, as I was like, this is not a place you put all your money. This is not a replacement. Like, I think 25% is a good target for most people. If you have a 401k and, like, no matter what you do, you're not really going to get to your goals, I think it's appropriate that you could put 50% in, because you're not choosing between, giving more money to your kid's wedding and investing in options. Like, your 401k has to be invested. And it's like, if you put that stuff out there and it's like, well, if you didn't listen to me and it was 100% your money, it's like, well, sorry, that's just kind of how it is. And then also it's like, when you've done it for 5 years in a row and everything's been kind of good, and it's like, even things like April 9th, it's like, oh, okay, like, this does make sense. And so there's a lot of understanding that goes to that, but, like, we can distort whatever we're thinking about and, like, lie to ourselves at how bad it could potentially be. And it's like, well, risk is always the probability of something happening times the magnitude of that happening. And it's like, we can even look at this back test. It's like, your custom vibe coded script that only takes 1 entry a day, like, the probability of that potentially taking a massive drawdown at a large size is very high. Whereas, like, if you're just selling condors every 15 minutes, market can only be in one place at once. Sure, you can get double stopped, but, like, you'd have to be sized really big to not see that coming, the magnitude and probability of that happening. And certain things like that is kind of why I even like making content, is when you say something out there, you really start to understand, like, oh, am I actually living by this? Or, like, how eloquent is my understanding of that risk really is. And I think that's what a lot of people miss out, because it's like, I think maybe I feel this more as a younger person, but, like, the job market's been kind of weird. I grew up in the Bay Area. I saw a lot of people take tech jobs that worked out really well, and it was kind of like right place, right time, to where, like, just the general job market is quite a risky, endeavor.
Don't get me started on 9-to-5 jobs, because it's the biggest scam. And I should be careful here. I had a 9-to-5 job. My wife works a job, technically.
You get paid to develop a skill. I think that's what a lot of people don't realize about the 9-to-5 job.
And if you realize that, I think you bring up a really good point. It's like, what skill are you developing here that, if you ever decide, if this employer disappeared, that you could take and run with on your own, right? How can you add some value to society to be able to extract some sort of income from it without having somebody, give you a place to work? Because the whole system. I mean, again, this is like philosophical. So like people, and I talk to people all the time, like with my like kids, like whatever, my kids like soccer practice. It's like every employee is always thinking, oh freak, like is AI going? Like for example, is AI taking my job? Is my boss? If we downsize, am I the one to go? Like this mental anxiety for a lot of people. And again, this is not for everybody. For a lot of people, it does exist. So it's like, are you developing some skill that you could, run on your own? Or are you doing something part-time, like, let's say, learning how to trade, learning how to automate?
Some people are just feral humans that can't be employed very well. They're just kind of always going around and working. But yeah, I mean, or even I think back to like some of the jobs that I had, and it's like I used to work at Rippling, which was, a very successful scaled startup or whatever.
Right.
And it's like, when I first started, it was like 2020 to 2022, like talent raise, free money going everywhere.
Right.
It's like we literally had a counterpart in India when we were sales development reps that like did most of our paperwork for us. Then they got rid of that. Then like funding kind of dried up. Then they were involved in SVB, so they had to be like clear with like some of the banking crisis and like tighten their belt a little bit. And then it's like they went down to our quota, and like so many people have been laid off and they've scaled their company so much. And I think they're a good company and everything. But it's like the deal I was really taking there was like flexibility for remote work, not necessarily a huge upward trajectory of the career, but if the company went well, my shares could pay off very well.
Yeah, your RSUs.
So like that's really the bet you're taking, and then
that's the only, like, you bring up a good point. That's the only way I think anybody that is,
you're gambling with your career, which I think is ridiculous. But it's like this is what society has done too, and I've even talked about this too. It's like if universal basic income gets instituted, even if you charge me a 50% tax rate, I'm going to be richer than I ever have before, because like everyone out there is going to take their $1,000 a week and they're going to try and YOLO it on options to try and make as much money as possible. And I'm literally just going to sit there and be like, I'm selling the risk premium,
Right.
And it's like that is what a lot of people have incentivized to do in like younger generations. And it's like this is just kind of a way a lot of things are set up. So it's understanding what system you're basically getting in and transacting, where it's like, for example, in California, a lot of people want to buy a home because it's in our society. It's worked out really well for people because of, I believe it's Prop 13, where it's like if you bought a house in 1980, you pay the same property taxes. So basically like California taxes income, not wealth, which doesn't really matter which one you're doing. But like you need to understand that's what you're entering when you decide to buy instead of rent, where clearly it can work out when you're renting. And I think that comes back, like, my decision making has gotten so much sharper from doing trading because I have so many reps of
100%.
cost benefit analysis
100%.
to where I can look through stuff and just be like, oh, this makes basically like 0 cents. And then it's like you look at a state like Texas, like brutally reassess property taxes and tax you a bunch of property. So they tax wealth a lot and they don't tax income at all, basically. And like for someone that's trading, like being in California is probably not the best spot for me because I have a huge amount of income.
Right.
I'm not sitting on RSUs that could hit 1,000 for one.
Right.
So it's like even those type of things, it's like I can sit in California and be like, oh no, I'm paying taxes, but it's like the weather's nice, So just understanding what you're entering to with those makes a lot of sense. And even when we come back to like TAMI and MEIC, it's like MEIC, you're entering in market S returns that are more capital efficient. Bull market S returns in all market environments that are more capital efficient. And it's like, it's not a strategy that you can deploy 5% of your account in premium a day because your drawdown is going to be brutal, which would be like 30% or something like that. So people just need to understand what they're entering. And, people put in 5-cent slippage on a back test. And it's like, I can promise you don't get 5-cent slippage, even if your brokerage shows 5-cent slippage, because they're triggering you off the ask. They're not triggering you off of the bid.
Right.
So just knowing these things when it comes to trading and what the deal you're entering in, I think is something that a lot of people miss just in general.
Yeah, it's again, it's a skill. Like you're learning. You're an athlete, right? It's a skill. Yeah. You're going up to bat. You're learning, like, have whatever sport you've ever played, right? Like the more shots on that you take, the more you understand how the game works. The more you practice discipline, the better you get at this, right? Like, and that results into some tremendous positive upside, right? Look at yourself, right? Like 5 years ago, you would have like, yeah, I trade options as like a hobby. I have a job. 5 years later, you're running, an 8-figure. I don't know if I'm allowed to say this, but X amount of a significant size hedge fund, right?
Yeah.
So it's like, would you have had that same sort of income trajectory at a job in 5 years? No, you wouldn't, Mark. Like, as smart as you are, like I worked for a major Fortune 500 company. Like you got to put in your time, the to get any sort of like what we would call decent income nowadays, right? And it's like the amount of bureaucracy, the amount of role playing you have to do to get there. It's just not, it's not for everybody. Some people are very good at it. Some people know how to play the character. You're one person at home and you go to work, you're a completely different person. And again, I'm sure there's some great employers that like treat their employees well, but it's just like, it's being employed and having a boss is just not for some people. And like the quicker you realize
some people
that,
are feral humans.
like, yeah, you rather drive Uber and like figure out your own means and your own income abilities than go and play a character at the next startup.
Yeah. Or you're in a chill job and you need to make more money and you're just like, I want a family, I want a house, I want some expensive shit. So I need to figure out how to make money,
Yeah. Yeah. And again, like, there's so much society is like, oh yeah, well, I just got to get a job at Google, or like, good luck. Like, dude, like, it's not as simple as it sounds, right? Like, this is like like the majority of people are just at like mediocre jobs, just like making mediocre money and just like, yeah, fuck, this is like the,
so yeah, we got that.
this is the cards I was dealt, right?
Yeah.
Instead of being like, I'll drive Uber at night and during the day, I'm going to learn the crap out of some skill set, right?
Yeah. So in terms of trading,
Yeah.
is there any questions you have for me or anything philosophy you'd like to hear coming off the cuff?
I don't know, man. I think we talk enough that like I get your mindset. And I think you do a ton more due diligence than I think I've even like. I do a good amount of due diligence, but I think you take it to like a whole other level, which is good to see. Obviously somebody running a fund has more responsibility to their investors and themselves to like really add value and real alpha to it. But like, yeah, just like good to see you putting in, because we share trades here and there, and I've reviewed how you like analyze a back test. I'm like, okay, yeah, this is a lot more stringent than I do, and I feel I'm pretty stringent. So
yeah, I think, I don't know, back testing it's like you have to understand what you're looking for, and then you also have to decide what you're going to tolerate. And it's like, I think you even sent me a back test the other day when you're like 3 cents entry slippage, and I was like, please explain to me how you don't have to cross the bid-ask spread to get filled. Like, even if, whatever your back test said.
Was it an SPX or SPY? I forget which one I said. SPY.
No, I think 3 cents was SPX.
Oh, okay.
It was SPX, and it's just like, you're gonna like your broker's just quoting you something, and it's like, okay, cool. Like
3 cents is out of the question.
Yeah. Then if you have 3 cents slippage, then like let's tack in a column for 5 cents of the order flow that Robinhood sold your order for.
Right.
But I think another thing that a lot of people miss that we didn't really address with the whole TAT and everything is TAT's done a really good job where it's like SPX, SPY, NASDAQ. And what a lot of people don't understand is like you can even look at Robinhood's public statements. It's like top 50 names are probably fine, but anything outside of that, or even anything that's not like weekly and quarterlies for a lot of those big names, like you're just getting destroyed on pay for order flow.
Oh, for sure.
And like they intentionally like make the stock lower, so it does that. And it's like you can basically avoid pay for order flow if you're resting directly at exchange. Obviously, there's some preferred partners that are quoting you. You may pay 5 cents or so on it. And it's like, this comes back to the frequency, all that stuff, where it's like the accuracy of price and like risk premium you can kind of trust, because that quote, like no one thinks there's any edge in there. It's like you have to take risk if you want to make money in SPX. And it's like, that is one of the ultimate like non-BS things that I at least, even if you're a foo or if you're pitching trading SPX off like technicals, it's like, fine, at least you're like, no one's making money off an instrument, where it's like a lot of these Forex things that are like in different countries where they're getting paid.
That's a complete dude,
like, or they're just trying to make money off the bid-ask spread with what that is. It's like SPX is very pure capitalist markets, and anyone can go and take a risk basically in their personal money career to go and trade that, which I think is very empowering from like the seat of your couch. And a lot of people aren't in the position because of their family, or they need to be close to other people, or what they have to do to pay their mortgage, where they can't do that in other aspects of life. And it's like, if there's one empowering thing, it's like for 79, I don't know how much it costs, $79 a month and some hard work, you can have all the free information to take some type of risk in an aspect of your life that has potential. And it's like, that hope is someone that's literally gone like 100x, 1000x, like an account size obviously with investors and such, it's like it's very doable, and that skill set, you don't need any credential of going to Harvard or doing whatever you can. It's like that type of potential. It's not easy or whatever it is, but I think that's what a lot of people miss and what is not broadcasted out there well.
Yeah. I listen, it's like, I talked to Kyle about this quite a bit. It's like, it's a 6-speed like race car, essentially. Like, learn how to drive this thing. It will take you to the financial freedom finish line.
Yeah.
You know, like the problem is people just don't want to, like, they don't fall in love with the process, like we talked about it earlier, right? Like, the fuel you feed this thing, it just is the key, right? So it's like, learn the mix of the fuel, you got to feed it and let it run, right? So
yeah. Or another thing that I played around, I mentioned this in a speech a while ago, but it's like people talk about that 4% withdrawal rate, where it's like you can withdraw 4% of your money and basically not run out of money. But it's like, I've even kind of played with this thing, so it's like, realistically, I think most people could actually do like 25 to 30% returns with a 10% drawdown, but like you're hitting that return basically every year. You have a little bit of tax burden, but it's like, if you kind of do the math and be like, I have, let's see, 3 years of expenses saved up in an account that's just in like a high yield savings account or something, and then you could live pretty decently off of like a 15% withdrawal rate. You know, if you're able to do,
it depends on your account. It depends on your account size, right? Like,
but that just completely changed it. Where it's like people think they need $4 or $5 million for retirement. It's like, dude, if you have 1.5 and you can do 20 to 25%, you can live like you can live off of 180 grand in basically
depends where, but yeah.
I mean, if you have a growing family, you're paying for college, like you have a mortgage paid off, but like that amount of income is substantial from not a very substantial amount of money. If you can like buckle down and 100%. Learn it, and it's going to be a 4 or 5 year journey, but like you can get to that retirement as a professional in their early 30s before you're 40.
100%. And you bring up a good point. It's like, so looking at a job, right? Like looking at a job, let's say
it's tax shittier,
dude. It's not only that. It's like okay. Let's say you make 100K, like an average job paying 100K, right? What does that net out? Probably 7 grand a month at tops after taxes.
Yeah.
Like, work backwards. How can you make $6,500 a month selling premium on TAT?
You sell about 100 grand of premium. Yeah.
You know what I mean? And that's
account wise,
you don't need a huge account for that.
150, 200 if you got a little bit of risk tolerance. I'd say like 300.
So it's like that's very attainable for a lot of, I'm not saying for everybody. And again, like I'm not trying to isolate anybody or like I'm just speaking of averages, right? Like that's very attainable for a lot of people to have an account size of 150 to 200 grand and be able to net out, let's say, 6 grand a month.
Yeah.
And now you've bought your time back. So you're not a millionaire. Don't get me wrong. You're not like, this is not Bugatti. What color is your Bugatti type of stuff? We get that. But you bought your time back. Now, what can you do with that time? Those 8 hours you were playing a character at a 9-to-5 job. What can you do with that time to go and build on your skill set? And that could be just, hey, I love TAT for just the 6 grand I'm producing, learning these 5 strategies, and I'm going to follow another passion. For me and you, it seems like, the passion is the trading. Like, we bought our time back, and now I've taken a slightly different approach. You've taken a different approach. Like, what can we do more in the trading sphere to not only grow our skill set, but our income as well, right?
Yeah.
So, but very easy to buy your time back, I think, with the skill set.
I mean, like, you got to get a little... Like, a key thing is you have to be useful in society before this really works. So it's like, as a 24, 25-year-old, like, you're just usually not far enough along to where you do it. But it's like, you've played the game. You've got 10 years in. You've saved and you have an account. And it's like, this is where you can really go. And it's like, as someone that started generating all their income from trading at like 26, like, now it's finally starting to work. But it's like, even with very large returns, it's like the cash flow on that my nest egg was so small that like
you have to have
it's really just starting to hit.
Yeah, and you have to, like, I think this resonates to people like, somewhat in their career, right? Like, or maybe they were young and had some RSUs hit, right? Like, okay, now it's like, and again, if you want to buy your time back, some people are okay to go to work 9 to 5, check in, check out. Mentally, it has its advantages too, right? You're not thinking. Like, for most people, it's like, come in, do these 5 tasks, get out, and go be with your family. Go play Nintendo, right? Like, that's okay. There's nothing wrong with that. But for some people, it's like, hey, I want all my time back, and I want to develop a skill or follow a passion or travel, whatever it is. It's like, and it's not the fancy, like, listen, it's not like you know, like
Yeah.
the lifestyle that the Furus are selling you, right? It's your time. That's the biggest asset you have, and you're trying to buy it back.
So also in the discords, like what do you think you've seen as kind of like one of the fastest roads to success that someone kind of hit, and like their iteration? Like, have you seen someone that's like gotten it super quick, and how quick do you think kind of that time frame was to people really generating the income that seems pretty consistent?
I know some traders. I mean, I won't mention like for anonymity. Like I won't like I know some traders that have found their style of trading and have very quickly been able to scale that style and produce some astonishing results.
Yeah.
Right. And it's just like they found what fits for them. They found it through, you know, just trial and error.
And how long do you think it kind of took those people to just like go from 0 to 1 to where they're like, oh man, this is some serious income?
I've been talking to like one trader for, let's say, a year and a half. He went from an average size account, maybe like 400 or 500K, to multiple millions.
Yeah.
Yeah.
No,
Definitely possible.
yeah. And the thing is too, is it's like with stuff like that, it's like if you have something good with like a 3 sharp, you can obviously scale it up to 30% drawdown, and you can get those gains. It's not really what I recommend people, but like it is possible in that realm. You just need to understand about the amount of risk that you're outlaying.
Absolutely.
Similar to buying a house with like 3% down. It's like you can see how that doesn't work super well for you.
Yeah.
Where it's like 20% is probably something that's a lot more responsible. But when you're taking that type of risk, there is that risk premium in the market, and you can build something systematic that does it. And it's like, personally, I've actually done it with, you know, some retirement accounts that I have where I'll use 100% of my buying power and buy it back. And it's like, I consistently, you know, do over 100% a year, but I also consistently take 20% drawdowns. So like, that's just not something you can really depend for on income. But the fact that, you know, it's tax free, I've got another portion of it in SPY, like, yeah, rip it. Like, it's got, like I said, it's the whole thing. It's got to be.
And again,
invested.
you have the comfort level to know that, right? Like,
Yeah.
that takes years, or, you know, X amount of screen time, X amount of executions, X amount of testing, X amount of conviction, right? That takes time.
Yeah. So what do you think people get wrong about automated trading?
I mean, we talked about this earlier. Like, they're not being diligent on the process of, is this matching up to what I'm expecting, right?
Yeah.
Like, they have a good day, or they see something and like, yeah, it's like, I made money today, like it's a win, right? Like, oh, I saw this Gex chart. He said there's a call wall here that's not going above, and it didn't go above. Like, I got out in time. It's like it's like it's just like a false hope, or whatever you want to call it. Just like, you're not sticking to the process, right? The process is the key. Like, you have this car, you have this race car. It's available to you to drive every single day. Do your fuel mixing, you know, before the market starts. Put in your fuel, press start, press gas, and connect, and let it ride. Like, that's kind of and just make sure you're watching for any sort of crazy market anomalies that can happen. Obviously, that's something that any diligent trader should be watching for. But just the process of execution.
Yeah, I think a lot of people also like kind of look for a confirmation bias, where people are trying to find the best time. Okay. Like, that's one example. So
there's a lot of channels on just like
there's
crazy curve fitting.
There's
times.
a whole like best time thing. And it's like if we just explain best time rationally, it's like there are certain times on a very, very long term that look better than other times. And then also based on a particular volatility environment, there's always something present in 0DT where it's like the decay is just rich enough, and you're just 10 or 15 or 20 or 25 points or 5 points at the perfect volatility to where that's the best time. And it's like the fact that we know that's the reason why certain times work, and then we try to extrapolate this on like a 30-day look back period. How I always explain it, it's like volatility is always changing. How we harness it will always change flavor over time, but it's always present. So the fact that we're using some arbitrary metric like a time to assess a volatility regime, I think is like just not a great way to scale some type of like, we're just introducing more risk premium to a risk premium thing, and it's going to be significantly harder to model what we're going to get to. And when we start going into the place and just being like, oh my God, look at these big numbers, like I can do this, like how does this work? It's like the market will basically change, and you can see that on longer patterns. It's like noon to 1 is sucked for however long, but it's like if you look back before 2020, like noon to 1 was quite good, which also makes sense because like again the whole decay thing for what it is. But now noon to 1 doesn't matter, and it's like if you tranched every 15 minutes, it would have just been the same continuously. So it's like, what do you want to add more leverage to the every 15-minute thing, or do you want to like curve fit and add more risk to?
Yeah, and it comes back to the logic thing we talked about. Like, what logic point do you have for me that 12 to 1 doesn't work?
So why I don't think 12 to 1 works is that
Wall Street is getting drunk. Like,
well, Wall Street's going to lunch, so like it's generally a more algo time, and then also like the way options decay into expiration, like there's a lot of decay in the first half hour, and then it basically drops off until 1 or 2 in the afternoon.
Exactly.
So like the decay per dollar is not that good, but like the wings further out are still quite expensive. And then also the biggest reason I think 1 to 2 actually sucks is just your likelihood of double stops is high because you're not far enough out to where you can't get double stopped because if it moves one way for the decay. So I think it's basically solely just for double stops. So like, then again, if we come back to the best type of day, it's like, you know, the reason 3 p.m. like we talked about works so good in like 2022 and whatever is basically just like you never got double stopped on 3 p.m. However, now it basically assures you you're always going to get double stopped on one side. So it didn't work, but it's like that was kind of the whole thesis behind 3 p.m. is like you don't get double stopped on a trade, and then like 11 to noon, like win percent's 1% lower, but the edge is so small and whatever. But then if you look at 11 to noon, you say, hey, we can reuse our wings. It's like it's free buying power. And if your expected value is $5 a trade when you're buying a 10-cent wing, and now you don't have to buy a 10-cent wing, like all of a sudden
you brought that edge back.
It starts to pencil out.
Yeah.
So that's just really when we talk about the business and the efficiency of everything is it's like I nerd out way more on that because it's like if I reuse a wing and I'm trading 5,000 contracts a day, it's like that's a big difference to me. But I see all those things, and I think people just go into Discord to like confirm what they want to get confirmed, or they like to bond with people that Kenny's got us, and oh, he always does this. And
I think, listen, I like I'll be the first. I do that myself. Like it's the community is this can be a lonely business for a lot of people, right? Like people are not trading, you know, like a fund, so that they don't have like clients ask them. Like for a lot of people, this is just like either full time or like even part time. Like there's some sort of camaraderie in taking stops together. You know, it's like, and it creates internal humor. So I'll be the first person to admit I do it myself because I enjoy the humor that comes from it, right? Like it takes the edge off this game a little bit,
there's
right?
bonding through suffering, but
there is bonding through suffering, absolutely.
Another thing that I really like is it's like amateurs talk strategy, professionals talk logistics. So I think a lot of people would be well suited when they look at how they're deploying their strategies. Like, how do I get so everything's lined up and it executes perfectly, rather than this like fancy trick play of how we're going to do stuff. And it's like really nailing down those logistics. Like we talked about, it's like, okay, how do I get my commissions a little lower? Can I go to a few brokers? Or it's like, even things people don't realize is it's like, if you run a long ball suite in SPX, and Interactive Brokers has a really good portfolio margin and they pay a lot on interest for your account. It's like, that actually works really well. Where it's like, you can't get interest on Schwab, but you have to kind of like buy treasuries and it takes a month for them to clear. So it's like Schwab could literally charge me half as much on commissions and I would still make more money on Interactive, because you're not focused on the logistics, you're just focused on one data point, and kind of understanding all those little things that it's like that's the freest, best money that you could possibly take up. And it's like, how do you ensure that like by running, for example, trade automation toolbox on a server, that like you're never going to miss occurrences because you're on stable internet, like you're able to set all that up, you know how it's working, and like those logistics of trading is what
100%.
Like I think the free edge. Like if we want to talk about edge, trading is risk premium. Like the edge is everything around setting up you collecting that risk premium.
And I think any self-respecting
how do you make money off sawdust?
Like any really self-respecting trader that takes this as a real business or as a real profession has that stuff nailed down to the T. Like you missed your template missed an entry, it expired essentially, then something's off with your settings,
Yeah.
right? Like you need to know that immediately, or like those shortcomings of like low volatility may not have enough premium that you're looking for. Like how do you circumvent that, right? Like
Do you walk around with the Starlink all day in case your internet connection goes down?
I have my phone. That's about
That's alpha. Starlink is alpha.
Yeah, Starlink. I mean, you're paying for it. It's not cheap. But I think at a certain size, it's like you're doing all of those tactical refinements to make sure you're not leaving any stone unturned. That's like silly stuff that like I should be collecting. Like, yeah, this is silly. The fact I'm not thinking through this is
Yeah. What's next for Tat?
Oh, we got a lot cooking.
I mean, yeah.
I can't leak it here.
Come
but
on, you got to give us a little hint.
But there is stuff cooking,
taste.
and again, it stems back to like, just the numerical part of the data that's coming back from your trading. Like you could be a lot more done with that to keep you more in line with your expectations, and I think we're going to see quite a bit of some good stuff come out of there.
So if Tat works out perfectly and hits all their KPIs over the next 2 years, what does it look like?
It's a more advanced, a smarter automation tool that really like the numbers, because a lot of people are taking the numbers that it's spitting back out results wise and sort of cooking something on their own with them, right? Like analyzing them in a certain way, or extrapolating their own sort of what's working, what's not. I think you're going to see a lot more stuff that's going to do that for you automatically.
Any content?
I can't.
Dude.
I don't, because I don't want to promise something.
Dr. Couch, me, you, a hurt trader from Trade Automation Toolbox. We fix him up, put him out there, get him back on.
No, listen, and I think we're doing already a better job at, like, if something is off or something didn't work, like we've built some systems already where people are going to get faster, better service. Like there's some cool stuff coming that we're beta testing right now in terms of like how people even like file like, hey, something wasn't working, something that, like how we help solve that quicker for people so they can get back to trading.
Yeah. What do you think of those other automation services out there?
Listen, I think all of them have their advantages and disadvantages. I'm never gonna badmouth anything, right? So like, I just find that for 0DT in specific, the way the layout, the way the driving experience is for TAT, it's specifically for 0DT, it's truly like purpose built for that. It's a true 6-speed. It's like if you look at the other solutions, they're more of like an automatic, luxury car, if you want to call it, or like they're just cruising, where you could really like drive TAT and really pivot. Like, listen, if you have to, you could kill all trades with one button. Like you're looking how much delta exposure you have here, there, like if you're looking at that kind of stuff, right? So
yeah, I would say it's like the brokers I actually think influence automations more than the individual automations. It's kind of like which broker works really good for you is a big point for them in general. And then it's like, how did they kind of fit your lifestyle with like, are you a Linux person or are you a Windows person, and kind of how that works for you. But I will say that like almost all new automations suck pretty bad for the first 6 to 12 months. And then they all kind of converge on just, do you want better UI? And they all kind of fix out their bugs.
Right.
But like any new automation, I generally say give it 6 months. Don't get on it in beta.
Right.
And it's like, I mean, even TAT beta stuff, like I'm in the beta group. We've been in it forever. And it's like, beta is beta. Like
there's reason for why.
There's reason it's beta. That's how we develop products. So it's like
the
the new shiny thing is generally not revolutionary. It's like use what's been tested. Like they're all good. Like, and even when we started, it's like, so like Trade Steward and TAT have really kind of come to the front, and I think they're both very good. It's like when we started, Trade Whispers was out. That's not very good. I didn't like Trade Whispers. Option Alpha is I think really far behind. Like Tasty Trade as a broker hasn't really embraced much of this, which I think is kind of off too. So it's like it's really just a TAT Trade Steward type thing. And then I think
Option Omega has their
new again.
Yeah, new,
I will not give my opinion on Option Omega until it's been out for like 6 to 9 months and then I start using it. So I just like haven't even delved into that yet.
And again, what are you looking for, right? Like I think all of these products are suited better or worse for certain type of traders, right? So,
yeah, and another thing too, it's like this even comes back to Furus. It's like, what are people incentivizing? Where it's like, I think Option Omega is great because you can compare everything in one. So it's like no matter what any other platform does, it's like the fact that they have the back testing platform one is always going to be a huge advantage. But like I also think it's dangerous that like someone could just grab a link off Discord, click play, not really understand what options are doing. And it's like I think that is kind of a trap where it's like, you know, some people are looking at getting butts and seats to be like, how do we trade this automatically? But the process of, for example, on Trade Steward and TAT right now, you have to use a webhook from TradingView. It sucks because you have to pay like another $70 to do it, especially if you don't want the entry to cancel every day, or else it's like $15 or whatever.
But if they have a once or twice a year like crazy sale, which is normally
they have a Black Friday thing,
which I normally buy my annual membership then.
But that process of going through TradingView, learning some Pine script, monitoring it, I think is actually kind of very valuable for trading. And it makes it be like, wow, I did my research. This really is good on a portfolio. Whereas like if you can just click a button once and have it going, it's like, like, do we really need that in the space for like the 90-second?
I think it's dangerous. Like, honestly, I like people don't realize that are new to the space is like what kind of like options are crazy leverage products, right? Like,
yeah,
especially if you have a small account, like you could do some pretty significant damage pretty quickly, right? It's like, and again, I don't follow a ton of Option Omega content where they're like saying, oh, do this and make X. Like, I don't think they do that, but yeah, you have to understand, like, this is a business. Like, you're not going to go on, you know, create a business without understanding the premise of it, right? Without understanding what you're selling, why you're selling it, why you should be making money doing it, right? Like,
yeah. And there's just different things out there. It's like, I think courses are really valuable. Like some of the courses on Option Omega are really good. Like Special K did one on the Earn 1DT thing.
Yeah.
Strategy ended up not doing great, but like great course. I learned a lot
from the premise. Like, again,
yeah.
He's teaching the premise of the edge or whatever. Like, I haven't taken the course, but like,
yeah. And I think those type of details to like kind of like get a glimpse in people's minds is really what is really valuable when you start to be automated option trading.
And again, it's the time buying back. Like
yeah.
You don't have to stare at the screens all day. You really don't. Like, you can do something else, right? So it's like, think about what that does, right? If you could buy your time back from working a 9 to 5 by using TAT, plus take that time and either invest it back into trading or back into, you know, you want to just have a dance school. Maybe you want to, whatever it is that you're into, right? Like,
yeah,
it's powerful, man. It's powerful stuff.
Thank you everyone for watching. Check out my other videos, or if you have any other questions or want to do any other ideas for series in the future, feel free to reach out to me or Eugene on the TAT Discord. Happy to do more of this.
Thanks for the time, guys. Thank you for having me.